A new trading week has just kicked off, however market sentiment remains pessimistic. Investors are voicing concerns about the harmful impact of the coronavirus on the global economy. Fears over the new coronavirus have triggered a sharp fall by 9% in China's shares as markets reopened after the Lunar New Year holiday. The fall of the yuan was subdued by the People's Bank of China. Recently, the central bank has pumped 1.2 trillion yuan worth of liquidity into financial markets. It's $174 billion US. However, despite these measures, traders refrain from risky assets. Even the US dollar plummeted on Friday amid the news on the spread of the epidemic. The USDX index, which measures the greenback against the 6 major rivals, gained ground on a background of positive data on US consumer incomes and spending. Now it's trying to resume an upward trend, starting the trading week with a rise to the level of 97.50. The dollar-yen pair is also attempting to recoup its losses. On Friday, it failed to follow the trajectory of the US dollar and broke the lower limit of the previous trading range at 108.60. Now the pair is consolidating before its further decline to 106.90. The demand for the yen was undermined amid the release of fresh statistics from China. Activity in China's manufacturing sector declined, albeit the fewer beat economists' forecasts. In January, the manufacturing PMI score was 51.1. The Australian dollar remains near the 0.6700 level after Friday's drop in anticipation of the Reserve Bank of Australia decision on its key interest rate. Investors have already priced in the probability of the interest rate cut, so if the regulator reduced its interest rate, it will not trigger a crash of the Australian currency. However, the Aussie may update the lows, falling slightly below the level of 0.6680. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.